The best advice that I would say is you need to properly plan. Proper planning prevents piss poor performance. There's a popular quote that says, never lose money when you're investing. And, I've heard that quote before. Maybe you've heard that quote before, but they say never lose money. And it's like, well, if you're investing, how can you never lose money? What's up, everyone, and welcome to Real Talk with Olamide, where we are going to be talking about all things real estate. So today we have an awesome topic of what happens if the deal goes bad? What happens when things don't work out the way that you planned? What happens if you can't sell the property? And as a real estate investor, you have to hope for the best, but prepare for the worst. And so I'm going to talk through a little bit of my story and what are some things that you can do to mitigate sometimes when things don't go exactly as planned. So for me, I am a real estate investor. I also happen to be a licensed realtor and a licensed loan originator. I have had situations where my deal did not sell as fast as I had hoped for it to be. I came into the market, my first couple properties, once I bought them, I was able to sell them pretty quickly. And so I was really used to, buying and selling. In fact, I had even had a situation where I found my buyer before I even bought the property. And so starting off, I was able to get into that flow of just being able to quickly find buyers. I was new, I didn't know what to expect, but I was selling properties pretty quickly, the ones that I bought. And then eventually I came to a property that just didn't sell as quickly as the other properties. In fact, I've held a property for over a year, a property that I thought could have been a short-term sell. I've actually held for over a year. So shout out to not having to pay short-term capital gains, okay? At this point, it's gonna be long-term because it's over 12 months. But at the end of the day, it was different from what I had planned. And so I'm just gonna talk through what can you do when things don't exactly go your way in terms of getting rid or selling a property that you have. The best advice that I would say is you need to properly plan. Proper planning prevents piss poor performance. There's a popular quote that says, never lose money when you're investing. And, I've heard that quote before. Maybe you've heard that quote before, but they say never lose money. And it's like, well, if you're investing, how can you never lose money? And that quote is essentially saying that you need to buy the property at a discounted price. If, for example, just throwing numbers out there, if you buy a $100,000 property for $20,000, what's the likelihood that you're going to lose money? You've bought it at a discounted price. So especially if you're looking to flip a property or sell it short term, you want to buy it at a discounted price so that you have room, so that even if something negative did happen, whether it takes longer for you to sell, whether the expenses are more than you forecasted, there's so many different things that can happen. But if you buy the property at a discounted price, a lot of times that automatically mitigates that for you because you've created room for your property to be able to mitigate if it doesn't sell as quickly as you would hope for it to. So if a property doesn't sell as fast as you want to, you have to look at each scenario because each scenario is different. So for example, if you have holding costs, and holding costs are essentially, let's say you borrowed money from someone and they charge you an interest rate, the holding costs are essentially, you have to keep paying them interest if you're holding on to the property. So if you have holding costs, let's say for example, you bought a property and you wanted to fix and flip it, which is essentially means you buy the property, it's essentially a fixer-upper, so it's a property that needs some work. You want to fix it up and then you essentially want to sell it retail, so you want to sell it to an end buyer. Maybe you want to use a realtor when you're selling it. So you're fixing it, you're buying it, you're fixing it, and then you're flipping it, aka selling it. Okay, in this situation, what happens if you bought the property with hard money lending or private money lending? These are two types of lendings that are quicker to get. So a lot of times investors do this because they want to buy a property quickly. So they're looking for quick access to cash. But a lot of times if you're buying with a hard money lender or a private money lender, they may charge really high interest rates. If you have to hold on to the property for a long period of time, that might kind of suck because you have to pay this interest. And maybe you did it for like a 6-month term or a 12-month term. And so, if you're not able to sell the property, you're like, oh my gosh, what am I going to do? And so it's really important for you to understand what wiggle room you have. When you are going into buying a property, you have to understand, okay, what happens if you go in with a hard money lender or a private money lender, you go in with a loan with a high interest rate, and then it takes a longer time to sell. You have to be prepared for that. You have to really do your research on the property. And a way for you to do your research beforehand is that you can look to see how fast properties are selling for in that area. If they're taking a long time to sell, then that might be a case that that property is going to take a similar amount of time as other properties in the area. And so doing research on the property, understanding what the inventory is, so how many properties are available in that area, those are the key insights that are going to help you to mitigate and to understand, be able to sell your property in an effective manner. One thing that I'll always say is you don't want to be a hungry buyer. You know, some people become real estate investors and they're like, oh, I want to buy 10 properties this year. I'm going to buy it. I'm just going to make sure that I buy it. It's like, okay, you might have 10, you can go buy 10 properties. There are 10 properties being sold, but are they going to be good deals? Are they deals that if you aren't able to flip them, if that's your end goal, what happens if you can't flip them all? Even if it's a buy and hold, so a property that you're buying and you want to put a tenant in, what happens if your tenant doesn't pay their rent? What happens if you have to end up foreclosing on a tenant? You know, there's so many different things that could go wrong. You have to be prepared for if things go wrong. If you buy a property subject to, what if the bank calls a due on sale clause? That rarely happens. And again, this is not legal advice, but that rarely happens. But you have to be prepared if those things happen. You just have to have it in your mind. If the worst case happens, what are you going to do? And how are you still going to make money in the deal, or at a minimum, come out scotch-free without losing any money? Let's just say you've already bought the property and at this point, it's just not working. You're not able to sell it. A whole bunch of things are happening. Here are a couple things that you could maybe do. One, switch up your marketing. Let's say that you were doing Facebook ads to try to find a buyer. Instead, maybe try to do a bandit sign, put a sign in front of the house. Bandit signs can be very effective when it comes to selling a property. Another thing is maybe you might want to lower the price. Lower the price. If you are very desperate to sell, you might want to lower the price so that you come out with being able to not lose money, but not make money. Maybe you come out break even. Another thing is that you can go back and talk to the private money lender, see if you can extend your loans, try to renegotiate those terms. Sometimes that's possible, sometimes that's not possible. So those are some things you might want to go back and just talk to the person that lended you money or the company that lended you the money. Let them know that it's taking a longer time and see what your options are. So renegotiating those terms of the loans is an option that you can take. Another one is maybe you want to go ahead and use a realtor. So some investors just want to sell it themselves. So if you're not able to sell it yourself, maybe you can go and talk to a realtor and see if they can list the property for you and see if they can help you to find a buyer. That's another way. So there are multiple different ways, but really you don't want to get to the end when you're already in this situation to start thinking about these things. You want to think in advance, what are the different things that could go wrong depending on how you bought the property and how you plan to exit or sell the property. If you even plan to exit, some people might want to hold on to it. But the key here is that you want to plan in advance. Hopefully you don't find yourself in this situation, but if you ever find yourself in a situation where you're having an issue selling a property, you're having issues with your property, just know that it's a part of being an investor. But the best way to mitigate this is to prepare in advance, do your research in advance, negotiate in advance, understand the risk in advance, and be prepared to mitigate them in case they come along. And so thank you for tuning into Real Talk with Olamide. I hope you learned something new today. Make sure that you like this video. Make sure you hit that subscribe button. Feel free to leave in the comments if you have any questions. There's also a link in the description if you want to get in contact with me. Take care and have a great day.